Hello, chart watchers, and welcome to this Monday, March 25th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we're starting off a new week and a little bit of volatility back and forth. We got the Dow Jones Industrial Average currently up 5 points, the S&P 500 down 3 and change, the NASDAQ down 14, and the Russell 2000 up 5. So literally back and forth, depending on which index you're looking at the moment. 10-year Treasury yield, though, continues to weaken. We are down another 3 basis points today, 2.43%, challenging that low that we saw early in the day on Friday. We'll see whether or not that holds. The further we go down the 10-year Treasury yield, obviously the more indication it is that the market is turning much more defensive moving into Treasuries. Volatility index, you can see over the past 2 months, we have really struggled when the VIX has gotten up to 18, or the VIX has struggled when it's gotten up to 18. We got up there again today, got close, haven't made that breakout, certainly no closing breakout. That would be a level I'd watch pretty closely. The consumer discretionary group on a relative basis actually holding up pretty well. And industrials, after going down and challenging the earlier March low, we're back down there again, but we are trying to find some support there. These are the two areas of the market that are the strongest today. Technology, going to give them a pass. This is a group that's been leading the market to the upside. Today it is the laggard, but this has certainly been one of the best areas of the market. So having a couple of days to the downside, I wouldn't necessarily look at as too negative at this point. Semiconductors, one of the big reasons why technology is struggling today. Semis have been very strong so far in 2019. We did have a big move down, though, on Friday, and we're continuing that weakness today. Actually, right now, testing the area that we broke out a little bit over a week ago, around 3,400. I think the combination of that and the 20-day moving average is something to keep an eye on. Xilinx, one of the names in that semiconductor space, has been one of the best semi stocks out there, but the stock's been under a lot of pressure since Thursday's high. You can see big down move on Friday, also struggling again today. If we don't hold that rising 20-day, I think we could go back down and test that earlier low in March. But Xilinx has been a great performer, so I would expect to see some buyers coming in at some point. NVIDIA also having a rough day. NVIDIA throughout March, very, very strong, beginning to regain its leadership. But the last 2 days, kind of like Xilinx, struggled on Friday, struggling again today. Its latest breakout was about that 164 area, which coincides with the rising 20-day. If NVIDIA gets back into that level, I think we'll see a little bit more of a battle put up by the bulls. All right, Erin, start of a new week. Tell you what, Friday was a rough day. Made a big reversal, but we'll see if the market can hold on here or whether we start selling off again in the afternoon later today.
Yep, absolutely. I got lots of climactic readings on Friday. I'll probably talk a little bit about that in sentiment. But Carl and I were talking during our Friday show. And we both kind of agreed that while it looked like it could be, with the VIX stretching out that low, that we could be looking at a selling exhaustion. It looks more like an initiation. So I suspect we're going to see lower prices into the week.
Yeah, I'm kind of mixed at this point. I mean, I am nervous about the market. Anytime we see that yield dropping like that, and then we have an impulsive selling move like we saw on Friday, I get a little bit more nervous, but I did start putting a couple toes in the water today, a couple of stocks. I sat out last week. It's post options expiration week, which typically is not good. All the warning signs with the bond market last week, negative divergences everywhere. I think you're right. I think the market could have a little bit more downside. I'm just not necessarily looking at it as a real bearish thing. Not yet.
Right.
Yeah, I mean, I think that the rising 20-week moving average is going to be something to watch really closely on the S&P 500. We still have room down to the recent lows in March. I think if those lows hold, I think we're fine. If those don't, then I think we got to reevaluate.
Yep, it was time for a pullback. And I think it'll make things a lot more enticing once we get that pullback.
Yes, it will. Well, we got another big day. Of course, it's Monday. We're always busy on Mondays. What we got going?
Exactly. Well, we've got quite the week ahead. Tomorrow, I'm going to be doing my workshop on reverse divergences, but I'll also cover the positive and negative divergences as well. Doug Bush from ChartSmarter.com will be with us on Wednesday. And Thursday, Dan Russo will be back from Chaikin Analytics. Hopefully you catch his morning show. It's really great. And then as far as today goes, we do have a regular Monday for you. Monday setups, earnings spotlight, followed by 10 and 10. Sunoco is going to be our first symbol, SUN. And then finally, we will finish up with the sentiment update. I've got some great charts to show you for that, so stick around. All right, Tom, technical news and headlines. What's going on out there?
All right, well, really, there wasn't a whole lot in terms of either. We do have Red Hat reporting after the bell later today, but let's go ahead and just jump right in, take a look at a couple of the charts here. With the, I'll start with the 10-year Treasury yield, because clearly we have a breakdown. This goes back 5 years. It's a 5-year daily chart of the 10-year Treasury yield. And on the bottom here, I have the S&P 500. And I wanted to point out a couple things. First of all, we have a series of higher highs, higher lows, higher highs, higher lows. I think this is obviously the bigger one from the intermediate to long term. Short term, I would have liked to have held about 270, certainly 260. And the fact that we broke down, not great action, no doubt about it. I would also say, though, that if you look back into 2017, we had a similar situation where it looked like the 10-year Treasury yield had broken down, was rolling back over, and then all of a sudden we broke back to the upside, cleared some important highs, and during that move, you can see the S&P 500, even though it was going up while the 10-year Treasury yield was going down, the 10-year or the S&P 500 did continue that push to the upside. So I think now we have kind of a similar setup. The 10-year Treasury yield coming down, similar to what it did the first half of 2017. The S&P going higher, like it's been doing. But I do think we're getting to a point where something's got to give. Either the 10-year Treasury yield, which just broke down, either has to reverse back to the upside, or like Erin and I were just talking about, if we go back down, we miss, we fail to hold on to some key support levels. I think the fact that we've got these tumbling yields, we have to be really careful on the equity side. I still believe we're in a secular bull market. We haven't yet escaped the cyclical bear. You don't do that, in my opinion, until you take out the prior highs. So, we could still go back down. I don't think we're going to, but we could certainly still go back down and test those prior lows or even break them to the downside. Again, I wouldn't be counting on that, but that possibility still exists out there. It doesn't make me feel any better, though, to see the 10-year Treasury yield tumbling. I'd rather see that gain some support and start to move back to the upside. I've put in my blog article this morning a chart of the German DAX, and I'll show you the annotated chart in just a minute. But when you look at the DAX, and the reason I like to follow the DAX and look at it pretty closely is that when I look at correlation with the U.S. market, there's really no other market around the world that is more positively correlated to the U.S. market than Germany's. So the DAX here, you can see off of this uptrend, 2016, 2017, notice we had this head and shoulder pattern. We had a left shoulder, neckline, head, right side of the neckline, right shoulder, and then a breakdown in the fourth quarter of last year when the overall market, when we got that breakdown in the DAX, that was one of the things, I think, that contributed to weakness in the U.S. But since doing that, we've moved back up on the DAX, went all the way back up and tested the breakdown level, and now we're starting to roll back over again. So I think the DAX could give us some clues. Now, let me pull up that chart in today's, I think it was under the pre-market. Yeah, here it is. So here's the German DAX. So this was the head and shoulders that I just talked about. Here was your breakdown. If you look at this from roughly 11,800 up to 13,500, you get about 1,700 points. 11,800, 1,700 points would take you down to 10,100 as a measurement, which, by the way, were these lows over here right around 10,100. Well, we got close. Didn't quite get there, but we got pretty close. And then we began to rebound. I think the DAX is in this range. We still have higher highs and higher lows. Keep in mind, too, that in Germany over the weekend, we had the PMI manufacturing come in. I think it was like at 44.7, down from last month's 47 and change. These readings below 50 tell us that that there's economic contraction in Germany. We don't have readings like that in the U.S., but one of the worries is that the economic weakness that's being felt in other parts of the world will be imported here into the U.S. Now, I'm not seeing signs of that yet, and I would be hesitant to just expect that it's going to happen because, in my opinion, we've been seeing this relative weakness, relative economic weakness overseas for a long time, and yet the U.S. market's been very resilient. So until I begin to see some other signs, I would be careful about just assuming that the S&P 500 is going to roll over. The DAX, for at least the short term, short to intermediate term, I would be watching this range. Now, clearly, if the DAX goes all the way back down here to the December low, it's going to be really hard for the S&P 500 not to do something similar. Down here at the bottom, this is the correlation I was referring to. The DAX and the S&P 500, looking at this weekly chart and using 20 periods as the parameter, you can see that it's not perfect correlation, but we tend to stay pretty close to positive correlation. Many trips up to this +1 level or close to it. Very few trips even into negative territory. So we had one of those back in the summer, late summer last year, but we quickly came back and the two started moving in the same direction again. So this is something I think that's important. Watch what's going on in Germany. See, because the ECB, the European Central Bank, is kind of where the Fed was several years ago, or a few years back, when we still had quantitative easing. The UCB's come up with a different, well, similar program to support low interest rates to try to trigger, economic growth. We've been through that. Europe is, like I said, trailing us. But once that all started, we never went back to those prior lows. And I don't think that Germany's going to go back down here. But this is something that I would keep an eye on. All right, a couple of other charts. First, and this goes back to earlier last week. I had an article talking about negative divergences. I'm not at all surprised that we saw the selling on Friday, and I think we could still see some more. And I think it's just kind of normal. We had a beautiful move up here on the S&P. We were down at 2350 and ran all the way up to 2850. That's a 500-point move in 3 months. That's unsustainable. So anyone looking for this trend or this momentum to continue at this rate, I think their expectations need to come back down a little bit. We simply got back a lot of what we lost in the fourth quarter. I would expect the market to settle down here, and that negative divergence that not only was showing up on the S&P, but also across all of our major indices and many of our sectors and industry groups. It takes some time to go through this. So I think that Thursday's high was definitely an important short-term high. And while we could bounce off of the 20-day moving average, I know the S&P is trying to do that, I would not be surprised to see additional consolidation to test this support area at about 27.25, 27.30. Notice the 50-day moving average right in there. When I see negative divergences, first thing I think of, PPO centerline test, 50-day test. This is the PPO centerline is kind of what I call like a reset. So if we get back down to that 0 area, to me, that's when we got to kind of start the ball game over again, and we'll see where we go from there. Now, I'm going to pull this S&P 500 chart up because in addition to this 27.25, 27.30 area that you see here, if I pull up a weekly chart, and by the way, in the prior 2 bear markets, the weekly PPO never went above the center line. Now, again, that's not to say it can't happen. Every market's different. But normally bear market rallies don't last long enough to get us back up above the PPO center line. So this, to me, looks like, we've got a lot of bullish momentum here. What that means is when we pull back, we should hold the rising 20-week moving average. That's at 27.34 now, which coincides with those numbers I just talked about on the daily chart. So I would be okay, and I'm going to give the bulls the benefit of the doubt here, down to that 27.25 area. If we close out a week below that level, then I think you have to reevaluate. All right, Erin, upgrades, downgrades, what do you have?
All right, let's take a peek. I have pretty much an even amount to talk about today. So let's go ahead and take a peek. All right. I am going to go ahead, of course, and start with our upgrades. Our first upgrade that I'm going to go over is New Oriental Education. This was upgraded today by Morgan Stanley from an equal weight to an overweight. And you can see a nice little short-term breakout that's going on over these previous tops. And honestly, if you look at these two tops and were to draw, horizontal across here, and then you were to connect these rising bottoms, that really is a short-term ascending triangle, and that is a bullish pattern, and the expectation would have been a breakout. I think the one thing you might want to be concerned about, though, is that $85 mark. That poses the next area of resistance, and I would think it might pull back there. We are seeing the PMO and momentum starting to shift and decelerate, but overall, I'm not that big of a fan here, mainly because short-term overhead resistance is so close right now. Next upgrade, First Bancorp. And First Bancorp was upgraded today by Standler O'Neill from a hold to a buy. I have to say they must be seeing something in their crystal ball, because I don't really see anything technically on this chart to get too excited about. First of all, of course, you've got a PMO on a sell signal right here. You can see that on-balance volume has been moving lower as we've been moving lower on price. And of course, the scooter has come down from almost 75 down to, what are we at now, 35. So maybe they're looking at this as a possible, bounce off of the area of support here at about $33. Could be forming maybe a reverse head and shoulders, but honestly, after a period of consolidation, I wouldn't be looking at that as a reverse head and shoulders getting formed at this point. But notice all of the EMAs too, negative crossovers all over the place. Right now, if you look earlier in March, the EMAs were set up fairly well here, except for the 50, which was below the 200. Now we've got it set up about as negatively as possible. So not like in First Bancorp. I want to see some improvement in the financial space. We're just not seeing that right now. Okay, next one up, Tegna Incorporated. Evercore upgraded it from inline to an outperform. Interesting call. We do have a PMO sell signal, so we have been looking at momentum starting to die. What I noticed was that had I seen this chart before this week, maybe on Monday, I would have been looking at a symmetrical triangle. And of course, those are continuation patterns. You're supposed to expect price to break out. Well, it did not. And in fact, broke down below the rising bottoms trend line there. And it looks like we're trying to poke back up above that. It held this support area at 1350. It actually didn't even have to go down and test all of it. But it might have some more downside to go to, possibly close the gap that would bring price down to about 1325. I wouldn't be getting on top of this one just because of the fact we did get that sell signal that came in. All right, let's look at some downgrades. Analog Devices today was downgraded by Bernstein, outperformed to a market perform. This one I thought looked a little bit interesting. I would never get involved in anything with a PMO that looks quite this negative. But there are some interesting developments, I would say, on this chart. Number one, we're coming down and testing a support area that lines up short term. Right here with these lows, but it's really close right now to support along the high that we saw back in June. So I think we could end up seeing a pullback a little bit further. I'd be a bit concerned, about a possible, it's a little bit like a double top. I'd be a little concerned about more downside, but I think it could be an interesting play if we get down here to that 102.50 area and test the 50-day EMA, maybe see the PMO flatten out a little bit. Could be an interesting play, but right now it's really set up to go and continue a pullback. All right, Digital Realty Trust. And this one was upgraded by Raymond James today from an outperform to a market perform. And what I noticed, first of all, was we had the nice breakout on Thursday of last week, continuation, but we did get what looks like a shooting star that was formed on Friday. So maybe not a big surprise to see a decline today. We do still see the PMOs on a buy signal and rising. So this could be a good opportunity getting that pullback to the area of the breakout from the February top. However, we could end up looking for maybe a little bit deeper decline here, maybe just a bit further down to the 116 area to test these tops we see back here. All right, and finally, last one, real quick. Texas Instruments downgraded today by Bernstein from an outperform to a market perform. And currently it's down 2.25%. Not looking too good. You can see we have that PMO buy signal in place, and then we whipsawed right back down after Friday's trading, formed that top on the PMO and ended up with a whipsaw sell. So I'm looking for this one to come down and test the lows from back here in June and June and August. Breakdown from that rising trend. PMO sell signal. I would be expecting more downside, so I have to say I'm in agreement with that downgrade. All right, here were the other upgrades, downgrades that I did not go over. Hibbett was upgraded today. AbbVie was downgraded. New Skin also downgraded today. I'll have this up in the Market Watchers Live recap, and you can peruse it at your leisure. All right, time to move into Monday setups. All right, well, it was an okay week, I guess. We didn't lose too much. I'll go ahead and take the screen and we can look at that. I still own Shen, actually. I bought that last week. So I was hoping for a little bit better performance here, but let's take a peek here. And Shen. So this was mine, Shenandoah. And I had it at, let's see, 4609. So, not the best setup there. I am seeing this rise now, that 0.75% rise and a test off of that 44 area. I'm going to still hold it at this point with the intention of likely seeing it reach the top of this trading zone. And at that point, depending on what everything looks like, I'll probably take some profit and get out. But not the best setup there, Tom. Let's see. What did you do?
Actually, on that Shen chart, though, I kind of like that. I think I mentioned that one last week as my momentum. The fact that it came down right to that support area and it's holding so far, I think it could rebound from there. But for me, I wouldn't trade it just because of the volume. It's a light volume stock, trades under
right
shares a lot. And, but technically, I think it could hold that 44 area.
Sure. All right, Footlocker. Let's go ahead and take a peek at that one.
Yeah, Footlocker definitely got caught up in some of the selling on Friday, like so many stocks. It has rebounded pretty nicely today. I don't remember now where it was last week, but I think I'm probably down 1% or so.
Yeah, 59.74.
Okay, 2%.
Yeah,
I mean, I like the stock. I still like it. Okay, I think that was a great earnings report where it had the huge gap up to open March. We've come back down. I think this probably is going to be very similar to some other stocks that we've talked about on the show where we've had big gap ups with earnings. You get those big black candles after an uptrend, and that just is almost like an exhaustive type move to the upside. So you need to let the stock settle down. I wouldn't be surprised, though, to see it turn back up and at some point within the next 30 to 45 days be back up near the 68 level again, challenging that high. So I suspect we'll probably see something like a cup that will form. So if you've got some staying power and not too concerned about the market at this point, I would hang on to it. To the downside, I'd watch those bottoms at second week of January and then again at the beginning of February. Yeah, right in there. I think if you close back below about $54, I'd be really nervous that we'd go back and see those earlier lows in the fourth quarter of 2018.
Yep.
I wouldn't want to hold it all the way back down into the mid 40s.
Yeah.
So not a great pick, but at the same time, market made it kind of difficult on the long side last week for sure.
Indeed.
Especially on Friday.
All right, so I have a few to share for this week. Hopefully we end up with a little bit better production out of what we're going to get here. I picked up Brixmor is one that's in my watch list here as far as a Monday setup. I find it interesting that I'm getting a lot more REITs again. I ended up, I think, having one utility in there as well. So these are sort of the defensive areas, but I'm seeing potential here as far as those defensive areas. And it could be because we are getting ready to look at, a bit more of a pullback possibly a correction, but we'll have to see about that. But right now I've got a PMO that's about ready to give me a buy signal on Brixmor property, BRX. And we got the pullback. So we had the breakout, and now we've pulled back to that short-term breakout point. And now is time to start watching it go back up. That's the plan, of course, based on what's going on with the PMO. I think that OBV is, it's rather flat. I don't think that's necessarily a bad thing right now. You've got the the scooter coming in here, and it is now in, a pretty good area here, the hot zone, as I like to call it. All righty, the next one I had on the list is eHealth Incorporated here. And again, PMO buy signal lining up. That's what you're going to see on all my Monday setups, because that's part of what I decide to do when I buy a stock. I didn't get a chance here to annotate it, but if you were to draw a horizontal across these tops, and then you can see that rising bottoms trend line that's come in here. That, to me, was an ascending triangle. We got that breakout. Now we're forming what I would say is a short-term flag. You've got the PMO ready to go, like I said, up here for a buy signal. OBV volume, like I said, rather flat, but I'd prefer that to a negative divergence. So I like this one. If it'll stay above that 60 area, that could be a really good pickup at that point. But right now, I still think for a Monday setup for 1 week hold, that this one could make a move up to the $67 range. Flowers Foods, interestingly, another defensive area of the market. Look at this beautiful breakout from a declining tops trend line. And you've got it's holding out on that resistance, though, as far as horizontal overhead resistance goes. We managed to get past it on Friday, and it looks like we're trying to trade above that area of resistance. But I would like to see that, I don't want to see too much more of a pullback. If we get back to that 2025 area, I certainly wouldn't be happy with this pick. I am not going to make it my Monday setup pick, and a lot of it has to do with the fact it is trading at its highs on the day. But I thought this one looked interesting with that breakout, and if you can get this to get above that $21 range, I think you're now breaking out of an area that we haven't been above since back here in August. And so I don't think there'd be any problem really for it to test its highs back here from April and May. So that was one. And then Kymco Realty, again, another REIT came up on my scan. PMO buy signal just about ready to come in. OBV a little bit flat, but you can see all of the positive volume that came in mid-March that I like. You got the breakout already. It's pulled back already after that breakout, and it looks like it's ready to go back up and test those highs from Friday. So I thought this one looked very interesting. This could pose a nice area of support at that $18 range. I am going to skip MHO because that's going to be my pick this week. Store Capital, another REIT, interestingly, like I said, again, got the breakout. It's holding this area of support now that used to be resistance at $33. We did dip down below that, of course, on the day with the intraday low, but I still like the way this one is setting up. You've got the buy signal just about ready to happen. You already have had a scooter in the hot zone since October of last year, so you should expect some good things out of Store Capital Corp, just simply based on the fact that among its peers, the scooter is pretty high here, over 90. So I thought this one looked interesting. But the one I ended up picking is MI Homes, and this is in home construction. I liked this chart, and a lot of it had to do with this short-term double bottom. These are short-term picks for our Monday setups. We're holding them for about a week. I like the double bottom. I like the breakout. I like the PMO turning up the way it is. And the scooter has just now hit the hot zone. I have to say the one thing I'm maybe not that thrilled about is the OBV. but it's actually starting to break out of that declining trend. And you can see it here. I did not annotate it, but we're starting to see the volume pop out. And I suspect on a nice move like we're getting today, the volume, if we get, obviously we're going to end up adding volume to the OBV. It's just a matter now of how much volume are we adding, where will we finish the day. But I like this one as a short-term pick, Tom, so that's mine. I've got a target. Let's see, it's at 27.18 now, so I'll give myself that extra.
Yeah, I kind of like the home builders. This is a group I was looking at over the weekend with interest rates low. With the yield dropping, that tends to be a pretty good environment for the group. And this is just a relative chart of the home construction group relative to the S&P. And you can see that back in 2017, it was very strong. And if you look at this relative chart and look at the RSI of the relative chart, when the RSI gets down into that 40 to 50 zone, that tends to be pretty good during a relative uptrend. And after downtrending throughout 2018, it looks to me like we've started to uptrend, went into this consolidation for a bit, kind of like we did over here in 2017, dipped down to RSI 40. And you can see we just did that and now starting to pick back up again. So I was considering adding a home construction stock this week. I haven't done it yet, but this is a group that I'm certainly looking at. So when I saw that you had picked that one, I think that could be a really interesting pick, and especially that space for this week.
Well, thank you.
Yeah, I'm going to go and first of all, the one I picked for my blog is already up, so I'm not going to do it. This usually is a big mistake for me. But stock was coming off of support. I really liked it down here in this 137.5 to 140 area. We had the breakout with earnings, pulled back, held this area. We had, bounced off of it multiple times in the last 8 weeks. And so I really liked it down below 140. Well, it's now at 143.44, and I've got a high that I think maybe is up in the low 150s. If I use 137 to 152 as a support resistance trading range, the fact that we've already rebounded back to 143 makes it really tough for me to pick this one. So I did pick it in my blog, and it's having a good day, but I'm not going to pick it for this contest because I think it's already bounced, and I just don't like the reward to risk from here. I'm going to go with Xilinx. So Xilinx, talked about a little bit earlier. I'd really like to see it hold the 20-day. I actually bought this one right on the 20-day earlier today, but I only got a third of what I want to get, and I'm actually looking down here at about this 118, 117 area. You can see the 50-day coming up from underneath, because if we failed to hold the breakout level on Friday, and if we fail to hold the 20-day, there is a negative divergence, higher price, lower PPO. So I wouldn't be shocked to see it get back down here to around the 50-day. So that's why I'm using it as an opportunity to build a position. I really like Xilinx. I've owned it in the last couple of months, kind of traded it in and out. But I do think that the negative divergences and some of the selling in leading stocks is going to create some nice opportunities. So Xilinx for me is one that I'm looking to build a position in. I'll go ahead and take it, though, because I wouldn't be surprised, especially if we finish decent today. It could simply bounce off the 20. We went just below it here in March, but for the most part, we've had strong volume, and we really haven't even tested the 20-day. So I'm going to go ahead and go with it. The current price, 122.74. If it closes below that today, I would be looking at, like I said, 117, 118, I think would be excellent support, and we'll see what happens there. A few of the other stocks that I liked, Trade Desk TTD, breaking out recently, another great earner from their last quarterly report, coming back down, testing the 20-day for the first time since that breakout. So I think this is a level where we could see Trade Desk turn. CREE is another semiconductor. Look at the volume come in over the past week or two on this breakout. And I looked at the weekly chart. I really like the weekly chart here. We had consolidated sideways for a while. We broke out. A little bit overbought, no doubt. Certainly could pull back, but I really like the stock as we go down the road. And ACIA, this is Acacia Communication. And I believe they're in the telecom equipment group. Also getting its first 20-day test since its earnings report. VEEV, which is a software company, Viva Systems, made the breakout above this 121, 122 area. Notice after getting up to 128, we pulled back, testing that area of the breakout. RNG, I may have had this one on last week because I like that 20-day test. I think I may have it made a nice pop, but with the weakness coming down, maybe putting a hammer on the 20-day. That's been an area for the past, really since the start of the year. The 20-day has been a great entry point on RNG. And then the last one, THC, Tenet Healthcare, testing its 20-day moving average after solid earnings report in February. So you can kind of get the theme there, but those are the stocks I liked. So Erin goes with a home construction stock. I'm going to go with a semiconductor. We'll see how we do a week from now.
Indeed.
All right. So I'm going to go into earnings spotlight. I'm going to talk a little bit about what I just talked about with the home construction group. And I want to look at some relative strength. So what I did over the weekend, I was looking at what areas of the market, the industry groups that have been outperforming during this 3-month rally. So one of the things that we can do is we can pull up the sector performance. So you should have my screen here. If I go into sector summary, and actually I'm going to do it at the industry group level, but I'm going to do it based on the aggressive groups. I'm still looking to trade the aggressive groups when they pull back because I'm not convinced we're going to go down for long. I think we could consolidate a bit, but I still think eventually we're going to go back to the upside. If I'm wrong, I'll be getting stopped out of some positions. Let's take a look here. So this is an intraday. Let's move it back. I'm going to go 3 months. Now, remember, the bottom was on December 26th intraday, December 24th at the close. So it's been exactly 3 months since then. So we're looking at the groups that have been leading off of the bottom. I think the S&P is up about 19% from that December low, from that close on the 24th. So I actually went through and looked at the industry groups in the 5 aggressive sectors that had gained more than 25%. So that's pretty significant outperformance during this push to the upside. And so I looked at internet, I looked at specialty retailers, broadline retailers, recreational services. Gambling, when I looked earlier, actually I think was up over 25%. So I did include that one. I want to show you, I'm not a big fan of the gambling stocks, even though they have been outperforming this year. Then in financials, we had specialty finance, mortgage finance, and I'm not going to read them all off, but that's essentially what I did. There were a couple here, industrials and technology, a number of the groups were above 25%. So I started pulling them up on relative charts. And I'm going to start with the gambling group. Now, gambling, you can see, first month of the year, gambling stocks really performed well, and that's why they're on this list. They have not performed well for the last 7 or 8 weeks. And so they're still living off of that huge January spike, but I think it was just relative oversold conditions. We had a little bit of a bounce, but we went right back down below that 20-day EMA on a relative basis, and we're trading below it. You can see what happened the second half of 2018 when we were below. And you can see this downtrend, relative downtrend we were in for a year and a half back in 2014, 2015. This is a group you really don't want to be in when it's in this kind of a position where its relative strength is below its 20-day moving average. So while gambling stocks look good when you just compare it on that 3-month chart that I showed you, when I pull it up on this chart, this makes me a little bit nervous. I think we have a double bottom. Maybe that holds, but I think we could be heading back down to test it again. So I'm passing on the gambling stocks for now for that reason. I want to zero in, though, on a couple of groups that I really like on this using this kind of a analysis. So, and we could be doing this on RRG charts as well. This is just a different way of looking at relative strength. So let's pull up the specialty retailers. This is probably my favorite group in the market. We had a huge rally, pulled back for a while below that 20, and look at what happened when we finally got going again to the upside. We're on the verge of breaking out, and that breakout I think would be very important. Last time we made a breakout above a big level back in here, you can see the outperformance over the next few months. I want to try and catch that. It's kind of like if you're a surfer and you're trying to catch that big wave in to the shore. If you get a breakout, a relative breakout of a group, and you're trading stocks, leading stocks within that group, it can be a really strong push. So that's what I'm going to be looking for when I look at the specialty retailers. Now, I go into my strong earnings chart list, and what I do when I see a group like this that I'm interested in, I just type into the search box specialty retail, and here's my list. It's in scooter order. So these are going to be companies that have beat top line, beat bottom line. I already like their chart. You can see the scooter ranks them high, and they're in part of a group that is attempting to make a really big breakout. Now, I actually own Alta. It's I only own 2 stocks right now, Xilinx and Alta. But Alta, if we pull up this chart, notice on Friday we came right back down to this key area, the top of gap support, and now it's rebounding today. This is a stock that I think is going to outperform. Even if the market pulls back, it may pull back, but I think it's going to hold on. And when the market outperforms, I think Alta is going to take off. Now, I'm looking at the stock and I'm going back on a weekly chart, and you can see sideways consolidation for 2 years. We just made that breakout on this move, and you can see the weekly PPOs accelerating to the upside. So I think, yeah, this stock is one that certainly could pull back if the market's weak, but I'm looking for relative outperformance here as we go forward. Now, what could change my mind? Well, probably a breakdown below the support area, the 20-day, the support area, certainly gap support down there at 310. I don't think we go back down there, but that would be something that would really begin to concern me. Otherwise, I think we see outperformance here. So Alta would probably be the one that I really like the most in this list. But I could pull up flowers.com. This is one I owned recently. Pulled back. I was kind of hoping to get it back around 1750. Hasn't done that. Trying to bounce off that 20-day. Flowers.com's been great. AutoZone, AZO, made the breakout above the recent high. Notice these stocks are not really getting hit hard. They're not losing any major support levels, even though the S&P took a big hit on Friday. Consumer discretionary, many of the aggressive stocks took a pretty good hit on Friday. These stocks that are leaders tend to hold up better during periods of selling. And then when we resume the uptrend, they tend to go back to their leadership role. So that's why I tend to favor these types of stocks. DLTR, that one was a little bit I think the scooter was 91, something like that. Let's see here. Yeah, it was 91. So it's a little bit below the others. But again, sideways consolidation. We break out. We go back, test the area of the breakout in the 20-day, and now we're starting to turn higher. Look at Friday. Stock was actually up on Friday while the market was getting hit so hard to the downside. So Dollar Tree, another really strong relative performer. So specialty retail is one group I think would make sense to keep an eye on. The other, and the reason I own Xilinx is it's one of the best semiconductor stocks. And when I look at the semis, keep in mind we were under pressure here for about 6 months, and this was not a great time to own semis. But now we're getting back up above that 20, and we're trending higher. So we've got a group that's outperforming the S&P 500. That's step one. That's important to me. Now the question is, what stocks? And so again, I go into my list and I type in semiconductors. And you can see among and I had to think which one I wanted to get because I really like CREE as well. But Xilinx and CREE kind of topping the list. MXL, not bad as well. But let's pull up Xilinx. And you can see Xilinx coming back down. Here's that 20-day test. Maybe, like I said earlier, it gets back down into the 117, 118 area. I would really like it there. That's what I'm kind of hoping we get. CREE, well, let me do it from here. I will be able to get an annotated chart. So CREE, well, that's a long time ago. I'd be looking more at this area on the breakout. Look at that volume. Pulling back today. Stock was at 60 on Thursday. Now it's at 55.72. Coming back down on much lighter volume. Again, when the money comes in the semis, I expect that CREE is going to see more than its fair share. I like this gap support zone. I think 54 to 55 and a half, something like that, or even 56. I think pretty good entry area into CREE. MXL, I think, was the next one. Let's pull that one up. This one's down below the 20-day, but it held support right here at 24, and it looked like it was breaking down earlier today, and now it's holding it. I wouldn't be surprised to see MXL turn higher from this 24 level. Look at the volume picking up throughout this uptrend. So you're getting a leader, you're getting accumulation, and you're getting it on a pullback near a price support level. I like MXL. LRCX. And again, if you're tuning in late, I'm looking at stocks off of my strong earnings chart list. So this earnings spotlight is kind of combining my strong earnings chart list with looking at relative strength. Look, trying to find areas of the market that I really like, and then using the pullback as an opportunity to get into some of those areas. Lam Research, look at the gap up, the volume, trying to make this breakout. It actually did make the breakout on Thursday on a closing basis with volume picking up. But with the overall market selling off, it's pulling back still. I mean, this could be 1 or 2 days away from being back at a high again, especially if the market were to cooperate. But Lam Research, I think, on a pullback looks very good. And 2 more, Amcor, AMKR, just consolidating sideways here, which I think is very constructive. Got the RSI. When it made the move in mid-February, you can see the RSI was up in the 80s. Now the RSI is at 49. So after selling off, going sideways for a while, I wouldn't be surprised to see another move to the upside in Amcor. And then the final one I had, Erin mentioned this one earlier with a downgrade, ADI. And it had a negative divergence, higher price, lower PPO, failed to hold the breakout. Now it's failing to hold the 20-day. I think a trip back down closer to 100 would be a great entry into analog devices. And I think when Erin pointed this one out earlier, she had looked at that prior high. I think anything back down around 100, 102 in that zone would be very interesting on ADI as well. And then the last group I wanted to point out was the telecom group. So here is the DJ USCT relative to the S&P 500. And after sideways consolidating for 5 years, look at this move right now. This is one of my favorite areas of the market. So I'm constantly looking for telecom stocks to be thinking about getting into. So if I type in telecommunications or telecom equipment, actually mobile telecom also is a pretty good area. Iridium, I'm not going to pull that one up. That's not a bad looking group. But if I just type in telecom equipment, then I've got my list here of the best in terms of their scooter rank. So I could go right down this list. I skipped over UBNT, but that one doesn't look bad. UBNT, I think, is in a cup, little handle. But the one I really liked was ACIA, making a big breakout. Look at the volume the last 30 to 40 days. Really, really nice volume on this move to the upside after sideways consolidating. I think this is one that's going to go higher. And the pullback was up over 58 just Thursday, two trading days ago. And now here it is back down testing its rising 20-day moving average. Cisco, one of the bigger names. So if you looking maybe for a little bit more safety, being in a big name, I think Cisco looks great. With the overall group just breaking out on a relative basis, you got to believe Cisco is going to get some love. And then Sienna. Now this one I talked about last week. I'd like to see this area hold between the breakout at 36 and these recent lows at 37. I'd like to see this hold and move back above. This was earnings. We gapped up with earnings, pulled all the way back, came back up, tested the 20, failed, and now we're moving back down. My line in the sand here would be 36. Close below 36, and I wouldn't take any chances. But stock was at 45 and change, almost 46 earlier this month. So if I can get into the stock and only have $1.50 downside with perhaps $10, $9 upside, I think the reward to risk here looks pretty good. Maybe you wait for a reversing candle. Maybe it's a tail that goes below 36 and you come back up and close above it. So maybe you just keep your powder dry for now, but I do like Sienna. A couple of others, smaller companies here. Well, this one's smaller. Viavi Solutions, big move up, heavy volume. Look at this pullback coming all the way back down. I think it's got great support at about 1160. The recent high was 1350. Trading at 1207, so as it gets closer and closer, I would not have a problem entering on the 50-day. Second entry maybe around 1170. Keep 1150 stop and use your target up here, 1350. I think this is another one that looks good, especially being in a space that's breaking out on a relative basis. And the last one I wanted to mention is MSI. This is Motorola Solutions. Very, very strong volume on this breakout. Didn't look like it was ever going to pull back, just kept going up, up, up. Well, it pulled back. I think now has established a trading range. I think the pullback into this 137.5 area is one level I'd look to. If you were going to get into maybe 3 stages, I think the pullback here at 133 would be a second level. And then ultimately, anything back down just below 130, I think would be great entry on MSI. So those were some of the stocks in earnings spotlight that I thought were really interesting. Again, starting with areas that I like in terms of relative strength. Then going from there, I'm finding stocks that have beaten top and bottom lines, have really nice looking charts, and continue to show leadership within those areas. I think that over long periods of time, I think you're going to do really well in the stock market if you focus on that combination. So there is the earnings spotlight summary. We do have the 10 and 10 coming up, and I am assuming, Erin, that you have an RRG for everyone.
You would be correct.
Would be.
We had about 25 requests that came in, and here's the RRG. I'm going to take these tails down just a little bit. And there you can see lots of you picking the northeast direction travelers, which is what we want to see. Interesting, though, I thought there were, we had a lot in the leading category. Let's see, we do it that way. Notice all the green. And then we had improving, there was only one. And our most popular, of course, is in here. We'll take a look at that one. No sector really is a winner. It's pretty much a mixed bag today. So let's go ahead and get started with Sunoco.
All right, we're going to take a look at Sunoco. I'm actually just annotating it as we speak, but I'll show you what I'm doing here. First of all, understand Sunoco is part of the exploration and production stocks, which have been underperforming the S&P 500 wildly. But Sunoco has been a great performer. So the way I usually will trade this, and I don't ignore a stock that's outperforming just because its peer group is weak, but it's going to give me a tighter leash. If I know the overall group is underperforming, I don't want to hold through a potential breakdown on a stock that's in the group. I don't want to start making excuses for it. So you can see there is the group to the downside, and relative strength is weak. But this stock, Sunoco, is actually outperforming the S&P and outperforming its peers. And you can see on its chart, looks pretty good. If there's a one warning on this chart that I see, is that recently with this breakout, there really was just not a whole lot of volume. I mean, if we're doing something, if there's accumulation going on, I don't know how, because there's really little volume coming in. We're talking about a $30 stock. So if there's a $30 stock and it's only doing a couple 100,000 shares a day, that's not a lot of dollar volume. So I don't think that there's a whole lot of accumulation going on by institutions. So I think there's a couple levels to watch. Clearly to the downside, major price support just below 29. I actually think, though, if it breaks below the 20-day, knowing what I know about its group, I would be out. So I'd keep a fairly tight stop. That light volume, the weak group, losing price support, if it does, along with the 20-day moving average, that would be enough to get me out of this stock.
All right, let's see. The most popular in the chat room happens to be Barrett Gold. Gold, G-O-L-D.
That's right, Barrett. I think their old symbol was ABX.
Mm-hmm.
This looks good, but I would not enter here. I want to see the breakout. I want to make sure it breaks out, because we've seen false breakouts before. We know how painful that is if you're jumping in at just the wrong time. There is where you need to break out above 14. We got up to 14.17. Now we're back to 14.02. Volume is heavy today. So if we go back, close near the high of the day, I'm going to like this stock. If we go back and close at the low of the day or near the low of the day, I'm not going to be nearly as bullish here. I do like the pattern. Move up, you pull back, test the high, pull back to a higher low. So you've got an ascending triangle here, which I like. So you've got an uptrend followed by equal highs, rising lows. A breakout above 14 today, in my opinion, would measure about $250 to the upside. So that would be a 1650 measurement. And these measurements are determined by the neckline down to that first low in the triangle. So you got to start with a high. The first move down creates that key low. Come back up. You can see testing, higher low, and then hopefully getting the breakout. But that move from 14 down to 11.50 is $2.50. So if you get a confirmed breakout with volume, I'd be looking for 16.50 to the upside on Barrett Gold.
All righty. Next one up was that only improving category stock, and that it was Limelight Networks, LLNW.
Don't like it. I think we got much better stocks in the internet space. You can see internet relative to the S&P has been rising, and yet LLNW relative to the S&P is really struggling and off of a relative downtrend. Same thing versus its peers. So and we're trying to negotiate gap resistance. So I'm just going to draw that gap resistance line in. You can see we just talked about a false breakout. Why you don't want to get in on a false breakout. That's a perfect example right here. You got major overhead gap resistance. Looked like we had it on increasing volume, failed, and look what happened by holding on. You just simply extend your losses. It gets very painful. I don't like false breakouts like this. So if we can get up and close above 320, 325 on Limelight, I would maybe start to think a little bit differently, especially if it was beginning to outperform its peers. But for now, I would pass on it.
Okay. Let's see. Big name here, Walmart.
All right. I actually owned Walmart, but I got out when I was getting out of the market last week. I still like the stock, though. First of all, the group overall is trying to make a breakout, hasn't quite made it. Walmart just kind of going along for the ride. I really would like to hold this relative support level, though, because I think the overall trend here is higher, but I don't want to start losing, moving to 5 and 6 month relative lows. So I do think that's important. So let's maybe draw that line in there. So I'm going to say right there. We don't want on a relative basis to lose relative support with its peers. As far as the overall market goes, or the absolute chart, I think around 96.5, 97. I would watch that pretty closely. I think we're in a trading range between that area right now on Walmart. If we go back below, say 96.5, we will have lost the 50-day moving average in addition to that price support. So it'll be harder to want to hold on, especially with the overall, with the stock performing weak versus its peers. And then we also could put in a support level here, which is Walmart versus the S&P 500. So those are some of the key levels I'd watch. I'm still okay with Walmart, but if we fail to hold those levels I just showed, I'd be maybe a little bit more cautious.
All righty. Let's see, the next one up is Tenant Healthcare. So that's THC.
Yeah, this is one I included in my setups. I like the stock. Had a nice big breakout. I think it's a character change on this move. Maybe you could argue that we had already made a little bit of a breakout, but I didn't see volume there. Here, I see the volume coming in. So I think we have a character change on the chart. Keep in mind that the health providers or healthcare providers, not exactly going gangbusters right now. So this is one that I would watch that support very closely and maybe even consider exiting if it doesn't hold its 20-day moving average, because you can see that has been holding for the stock. So that's something to consider. And the reason I say that, look at what healthcare providers are doing. So you're in a weak group, and if you start to lose some key areas of support, I still think this is the biggest one, 26 to 27. We could lose the 20-day and still hold in this area. If we went below 26, though, knowing what I know with the healthcare providers, I'd be out. I don't think it's going to happen, though. I look for some support, and I wouldn't be surprised to see THC bounce right off this 20-day. All
righty. One that is in the news pretty consistently, Tesla.
Yeah, Tesla. What a disappointment it's been in 2019. Looked like it was trying to make that breakout at the end of December, and we could put it on a longer-term chart. But that 380, 390 area is really important long-term from Tesla. It never made the breakout, and that's one of the reasons why I don't like to get into a stock. Even though it looked really good here, when it's got overhead resistance, I want to see that breakout first. Never did, and now here it is losing 1/3 of its market cap in the last 3 months. But good news is it's got great support down around 260. So I'm not a bottom fisher for the, generally speaking. I mean, I like to have stocks that are leading, and I like to play that relative strength. So clearly you're not going to get that with Tesla. And you're also not getting it with the automobiles. Automobiles typically not a great area to be in anyway, longer term in the market. Tesla is one stock that I would trade when it's showing strength. But right now, as you can see, it is not showing strength. Other than hitting or getting close to price support, that's really the only thing I can find constructive here. And if I jumped in at price support or near price support and it broke below that 250 level on a closing basis, I'd be right back out.
All right. Sounds good. All right. Next one up, OneSpan. And that's OSPN, not ESPN, but OSPN.
Yeah, I think this chart looks good. Now, it did break down a little bit on Friday below these lows. It's trying to recover. I think if I was in this one, I'd have an intraday low or an intraday stop beneath today's low. I just wouldn't want to take a chance on filling this gap. Maybe what we've seen is just a little false breakdown. You see those lows right here, very heavy volume, gap up, come down. We hold on at about $19. We go back to 21.5, test 19, go back to almost 21. And then Friday, I'm going to give it a little bit of a pass because the market was just so weak. We went just below 19. Now we're trying to get back up above it. Today's low is 18.52. If I was in, I'd have a tight stop there on an intraday basis because I don't want to see it go all the way back down and test the bottom of gap support. So I like the stock, but just be careful with it in the near term if it starts to weaken again.
All right. Sounds good. Next up, Applied Materials, AMAT.
It's in that semi space. It's certainly been improving along with Micron, along with NVIDIA. Some of the lagging semiconductors have started to improve, and I would put Applied Materials right into that category. We did get a nice breakout above this prior high. I still think, Applied Materials was so weak for so long that it's still got a lot of overhead issues. And so it's going to take some time. I think the first one is probably right here at about 42.5. We almost got there. Probably the biggest one when we get there, and I do think we're going to get there. I think the biggest one's going to be up at about 44. Look at the volume that comes in on this gap down. We lost prior support, and look at the selling that took place. So I think getting back through that level at 44 is going to be the big one. In the meantime, I suspect we'll probably be in a trading range. I wouldn't want to lose the recent low down closer to 37. So I'd say 37 to 42.5 is your trading range. Eventually, I'd look for 44, and a breakout there on increasing volume would be very bullish.
All right. Let's see. Home improvement retailer, RH.
All right. Restoration. I think this is Restoration Hardware. I think that maybe they haven't had that name change. I don't like what they're doing here, trading below the 20-day, bouncing up, testing it, failing. Longer term, sideways consolidation. Let me look down here at the relative strength. Yeah, it was starting to show some pretty good relative strength heading into March, but now in March, it's been very weak. And that's with the overall group strengthening to a March high. So I think until we get a move back up above that 20-day, I would be cautious here. So I'm going to just mark that as the thing that bothers me. And now with the 20 crossing below the 50, that's a death cross. Definitely some issues here with the RH chart. Until that straightens itself out, I would be on the sidelines just watching.
All right. Last one up is Walt Disney, DIS. I think they're getting ready to celebrate their 75th anniversary of the opening of Disneyland this year.
Oh, wow.
Yeah.
Did not know. Well, I don't like the heavy volume break, not only below the 20-day, but also the recent low. I mean, if you're assuming that we have broken the downtrend and we put a bottom in December and we bounced, this reaction low right here after putting in a new high should have held, and it's not. And the volume is not light. So I would, Disney's a great long-term company. If it's in a long-term portfolio and you really don't enter and exit very often, then I would stick with it. But short-term, it has lost all of its relative strength versus its peers, versus the S&P. The group is now down close to a key support level. So there are some things that are just not good here for Disney in the near term. I would really watch this, because if the group loses its relative support level and you've already got a stock that is underperforming its peers in the S&P 500, as you can see it has been since the beginning of the year, then Disney could be in a lot worse position than it is right now. So I think the fact that we've lost that support level, next key support you're going to see is maybe down around 106. But on that kind of volume, I think we might go all the way back down to the December low based on how it's trading. So I want no part of this from the long side right now.
All right. There you are, 10 stocks annotated in 10 minutes. And here they are. I will have all of these up in the Market Watchers Live chart list, so you can copy them, look at them, whatever you'd like to do with them. Just go to the articles, the blogs articles tab, click on the Market Watchers Live blog, and the link will be right there at the top, as well as in all of the Market Watchers Live recaps. All right, we will be right back after this short message.
Join us April 1st to April 5th to celebrate our 20th anniversary here at StockCharts.com with special guests Arthur Hill, Greg Morris, Gaddis Rose, Martin Pring, and John Murphy.
Time for our final market update here on Market Watchers Live. As you can see, markets, really not doing a whole lot right now. Dow Industrials are down 32 points right now. S&P down a little over 5 points. NASDAQ, as we can see, is also down at this moment in time, about 1/3%. Mid caps traveling sideways now. A lot of these started lower on the day. You can see most of the indexes did that, including Russell 2000, made their move upward, but now coming right back down to Friday's close. And in some cases, like the Canadian markets, hitting negative territory. But right now, S&P 400 and Russell 2000, they're still in positive territory, unlike the S&P. You can see Treasury yields are lower on the day, and we are reading right now 2.412%. VIX is rising a little bit here. We're just under a reading of 17 at 16.96. UUP is up 1 cent, trading, well, it looks like mostly unchanged right now, of course. And then GLD, big gap up and continuing to move higher at this point. We have USO, which opened lower on the day, really took a tumble, but after breaking down below Friday's low, has managed to come right back to life, is now consolidating over yesterday's close, and is forming a pretty textbook-looking rising flag there, bull flag. TLT is trading just a bit higher, 35 cents higher at 125.21. And we take a look at the sectors right now and where they stand. At this point, consumer discretionary is the leader, up 0.44%. Technology and the financials are the laggards, as well as comm services, all of them down over 1/3%, with technology down over 0.5%. And that's all I have for the final market update. I'm going to pass back to you, Tom. What are you looking at?
All right. I actually am zeroing in here on an hourly chart. Because I want to try to see, we're not going to see strength on the daily chart until we begin to see strength on the hourly chart. So I've just pulled up the NASDAQ here, and you can see on the move to the upside, we were essentially holding that rising 20-day. We had a little bit of slippage here back last Wednesday, and then we ended up moving higher. But we did have a negative divergence in play. You can see the PPO never quite made it up to that prior high. So now I think what we've got is a short-term downtrending market. So the red arrows are marking the declining 20-hour EMA. So we want to watch that to the upside. Also notice that on a from a price perspective, we had a prior high at 76.75 here. When we broke above that, look at all of these tests at 76.75. We tried to bounce off of it late in the day on Friday, and then we completely fell apart at the end of the day. And notice today, when we got up as high as 76.62, we couldn't quite get to that 76.75 area, and now we're starting to roll back over again. So I think in the short term, we're trapped in this 80 or 90 point range on the NASDAQ. If we fail to hold the earlier lows today, I think we could go all the way back down to the March 8th low. And the reason I bring that up, that would coincide with basically a PPO reset at the center line, and going back, because we have negative divergence on the hour or the daily chart. Higher price, lower PPO. I'm looking for 50-day test. I'm looking for PPO centerline test. If we break down the new lows again later today, I think that the selling could accelerate, and that would be a much more significant area of support given the negative divergences. I'll be watching that 7,300 area on the NASDAQ. Back to you for sentiment.
All righty, let's go ahead and take a peek at what we're looking at right now. All right, so here we go with the decision point sentiment update for Monday, March 25th. And I'm going to be looking at the following indicators. The 10-day moving average of the put-call ratio, that's one of the sentiment indicators I use. The American Association of Individual Investors has a poll on their website, so we will look at what investors are thinking about the market right now. But then we're also going to look at the National Association of Active Investment Managers, NAME. This will tell us how exposed the money managers are currently to the market, and that gives us a really good reading of sentiment as well. We will look at the decision point right-X ratio to see where cash flow is going. We will also take a peek at the Wall Street Sentiment Survey, a survey very similar to the one that we have right now, the live poll. If you want to go take that, we'll talk about that after the sentiment report. I will be looking at the VIX as well as breadth, and then we're going to finish with gold sentiment. So we will look at gold, and I follow the discounts and premiums for the Sprott Physical Gold Trust, and we can use that as a measure of sentiment for gold. So let's go ahead and we will get started right now. Okay. And can you see my chart?
I can. You're good.
All right, perfect. Thank you. Sometimes I have trouble with that switch from PowerPoint. Okay, so let's go ahead and we will start with the 10-day moving average of the put-call ratio. I do invert my ratio, and you'll find that I invert a lot of my the various indicators I use, mainly because visually I want to see overbought at the top and I want to see oversold at the bottom. And based on how I look at these indicators and what they typically do, that's how I can decide which way I want to do it, if I want it inverted or not. And in the put call ratio, I like to invert it because that tells me when we put the ratio with the calls on the top, that means that when we get a very big ratio, that means that there's lots of calls and that becomes oversold, and then the vice versa. If you switch it over, you're going to get your bearish readings are going to get smaller and smaller, in which case that's when we're looking at the overbought. So what I want to point out right now is when the put call ratio is rising or when it bottoms, typically that comes right after or right before a price bottom. And so we got the lows, these bottoms on the put call ratio for both the CBOE and the equity put call ratios. And then we did see a move to the upside. Now, we did obviously get a pullback, and it appears that we're going to continue that pullback right now. And at the same time, the put call ratios are now starting to look overbought. So we have to be aware of that. If we get too overbought, of course, then we're going to start looking for the decline. So that's what I'm looking at right now for put call ratios. We are overbought and we are still rising, which is good for the market as far as the ratio, but we are in overbought territory. So I'm kind of looking at that really in the neutral camp more than anything else. All right, the poll for the American Association of Individual Investors. First thing I noticed was an elevated bull-bear ratio. And typically when you get to the 2 for a ratio, and that means that you have twice as many bulls as bears when you get a reading of 2, we're right now at just above 1.5. So we certainly are seeing a preponderance of bulls versus bears when it comes to the polling of Joe Investor. Any of us can go there and take this poll. And right now, one of the things I wanted to point out, so normally I would see this and start thinking very bearish things. And while you should still think bearish when you see these elevated readings and you end up with a lot more bulls than bears, I think it's important to note that 40% of those polled are sitting in neutral. They haven't made a decision. And so to me, I can get excited somewhat over an elevated bull-bear ratio. But the fact that we have 40% in the neutral camp, I just don't want to put too much weight on the fact that we are showing this elevated bull-bear ratio. But we do obviously have more bulls than bears here. Typically, when you have a lot of bulls, that means that, you know, everybody's getting on board. And that's usually when the wheel falls off, is what I usually say. So we get a lot of bulls on the train and everybody jumps on. That's when you start looking for the reversals. Well, right now we're only just above 37% that are bulls. And while that is elevated in comparison to the bears, I wouldn't put too much emphasis on that. All right, name exposure. So what are the active investment managers doing with their money right now? Well, you can see that pretty much in 2019, it's really stayed in that 72 to 85 range. You can see that in the thumbnail. And while that is elevated, because we can see points in time where we had much less exposure than that. So it is somewhat elevated, I'd say kind of on a neutral level. And we're not really moving too much. The exposure has increased slightly over the past couple of weeks, but not really enough to me to get, you know, to find it to be overly significant at this point. So we do have a name exposure index just above 78. Like I said, that is elevated, but we've certainly seen readings much higher than that as well. So I'm not really getting much from this reading. The fact that we are staying just about the same, I have to say, I would be looking at this as more neutral. All right, let's take a peek at the Wall Street Sentiment Survey. And like I said, this is like the poll that is currently running live on the in live stream there. If you're watching live, you can go ahead and take that poll. And of course, you can take it even when we're not live. But I'd like to pay attention to what all of you think, in addition to what the market timers are thinking. And right now, you can see preponderance of bears. I went into the week as a bear as well, and I'll be showing you why shortly. And you can see that when you get this, again, we've got a lot of bears in comparison to the bulls. And in fact, we're looking at a reading right now for that at 0.5. Interesting. And so really what I would be considering right now is we've got such a spike here in the bears that typically what you'd want to look for this week would be higher prices. However, I'm not going in that way. And part of the reason is when I look at, I'm going to skip ahead, we'll still look at RIDEX. When I look at what's going on with the VIX and what's going on with breadth right now, I am looking at this as a selling initiation. Typically, when you get these climactic readings, and we got climactic readings on Friday, notice how the spike here we had on the issues declining. And, you know, when we get these climactic readings to the negative side, then you have to determine, okay, is this an initiation or is this an exhaustion? And, you know, typically when you get a puncture of that lower Bollinger Band on the inverted scale, you look for a price rise over the next day or two. And on Friday, when we had this reading, Carl and I talked about it on the Decision Point show. And he mentioned, because I was telling the audience, I said, you know, typically this would mean that we should look for higher prices. And Carl pointed out, as well as myself, that what can happen is you can get that puncture, and then the Bollinger Band, the volatility really starts to expand. And as it's expanding, you're still getting these punctures all the way down. We saw similar action back here at the end of October, similar action back here in December. So like I said, typically it's going to lead you to a price rise. You can see right here, we had those punctures back at the, let's see, the end of December. However, look what preceded it. puncture all the way down. So we have to look at the whole picture. And when you get these very negative breadth readings in conjunction with something like this, I would start looking at it as more of a selling initiation in this case. And I suspect we're going to see an increase in the Bollinger Band size, and that we will probably experience some punctures going into the week as we see a VIX rise, and we still continue to see the lower Bollinger Band punctured. So we've got this decline. This is pretty much a textbook rising wedge. We're breaking down below that right now and trading below that. Something to consider. I would be looking for prices to come down. I'm actually looking at this area at about 27.25. I think that that's certainly a possible area, well, certainly for support when you look at that lower, when you look at the price low back here from earlier in March. And that's what I'd be looking for. Now, if you really wanted to get technical here as far as the chart pattern is concerned, you'd measure the length of the rear end of it and add that to the breakdown point. That would be a sizable decline, definitely correction territory. I'm not on board with that just yet. So I'm going to be watching this chart very closely. I want to know what's going to be going on with the VIX, and you can read more about it in the Decision Point blog. All right, so I skipped ahead, but let's go back and we're going to look at the RIDEX ratio. All right, so we track a basket full of funds. A company called RIDEX used to manage them, but now Guggenheim has them, and they continue to exist. And every night they report how many assets are in all of the various index funds and all of the various bull and sector funds. And so we get and as well as money market funds assets. So what we like to do is we track how many assets every night, and then, you know, add, subtract, let's see where we go. And what I noticed, of course, if you look at this from a distance, like we're looking at it here, you may look at most of these as flat, just slight rise even here. But what I'm looking at is only what happened the previous week. So where did we start the week? Where did we end the week? And we started the week quite low on money market funds, and then we ended up much higher. That really was the only place we saw an increase. So we saw more people moving into cash and pulling from the bear funds and pulling from the equity bull sector funds, which is, it's rather interesting. But this, you know, really, I think goes hand in hand with that AADI chart, where we had 40% of polies in neutral. Well, that neutral position usually implies cash. And as we can see, that's kind of where everything's going. So I would say for AADI, that poll really is reflective of what's going on with the money as well. So interesting to see more cash, more in money markets, money getting pulled out of both bear and bull sector funds. And then finally, we'll go ahead and finish with gold, and then I will wrap this up. All right, so we're looking at GLD here. And like I said, we use the premium and discounts to figure out what our sentiment is for gold. So for example, when you have very high discount rates, then that means you're going to, it's a bearish call. And if you end up with premiums or low discount rates, that means that you've got bullish sentiment going on. So sentiment being contrarian, we have elevated discounts right now, not as high as we have seen, but still on the elevated side if you look at where we've come here. And so it is elevated. I would think that that is somewhat bullish for gold right now to see elevated discounts. But really, I think gold looks good. And Carl and I, again, were talking about it on Friday. You know, we were starting to see some movement from gold. It's been a little bit of a tortured rally, as we call it, you know, a lot of up down on the way to the high we're seeing right now. But we've got the PMO buy signal now coming in on gold with a nice scoop. which is something I like to see on the PMO. It took its time, it made the decision, and now we've got the buy signal. And you can see we're getting ready to hit some overhead resistance. So be interesting to see what gold does, GLD in particular at about 125.50. But given the picture right now, I would be looking at positive more to see higher prices continue. All right, so that pretty much concludes what I have here for the sentiment update. Just a quick recap. Somewhat bullish, I would look at as far as the put-call ratio. We're neutral to bearish with AADI. Somewhat bearish for name. So really when you add all of these together, I would say we're still bearish to neutral. Now you add the bullishness, and now I'd say we're back at neutral for the week. And then we'll continue on. Neutral as far as the RIDEX ratio. Selling initiation as far as breadth and VIX, and then we are bullish on gold right now. So I think interestingly, mostly neutral right now for the market, but I'm more interested in the very short term in these climactic readings that we got on breadth and VIX. All right, so that is it, Tom. Time to close up this show.
Yeah, we got a poll up, obviously, see what everybody thinks is going to happen this week. I'm assuming that you think it's going lower.
Yes, I had voted on Friday lower. So it was mainly because of what I was seeing with the breadth and that VIX chart, the fact that we got a selling initiation.
Yeah, I'm kind of torn. I'm between going mostly unchanged and maybe lower, just because those negative divergences, still kind of end of the month. And by the way, March, I've talked about how the market tends to do really well at the end of the month and into the beginning of the next month. That doesn't hold true as much for late March as it does most of the other calendar months. Early April is bullish, but late March is not as bullish as some of the other months. Not quite sure why, but anyhow, it's just what it is. Mm-hmm. So given all of that, I'm going to go with mostly unchanged.
Okay. Yeah. I think that, like I said, based on the sentiment, that's kind of where we're sitting, neutral to unchanged. So.
Yeah, I mean, right now, just to give everybody a really quick update, we got the Dow Jones Industrial Average down 30, the NASDAQ down 22. So we are seeing a little bit of relative weakness on the NASDAQ. And I noticed over here on the S&P 500, the percentage down. This is really interesting because when I look here, of these top 10 down stocks in the S&P 500, 7 of them are semiconductors.
Oh, wow. I was going to say they're all technology, but
yep, NVIDIA, Analog Devices, Texas Instruments, Skyworks, and Microchip. 7.
Wow.
Yeah, so we know what's holding back the market today.
Yes. Possible opportunity though in the future.
Yeah, I like semis. They've been outperforming. I mean, not going to outperform every day, but yeah, I think that this could be setting up an opportunity. Like I said, I got into Xilinx a little earlier. We'll see whether or not that one can hold. I do think there's room to the downside still in the market with those negative divergences. Many of the charts are not showing 50-day tests or PPO centerline tests yet. So that's kind of how I follow the divergences. So we'll see whether or not we get a little bit more selling.
All right.
Okay, well, that is it. Another one in the books. This afternoon certainly is going to be interesting to see whether or not the market kind of falls back into what we saw on Friday and the selling begins to we see impulsive sellings, but we'll have to wait and see. Do want to thank all of you for joining us and being with us today. Please remember to complete the survey as you exit. It is located below your video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. See you back here tomorrow. Happy trading.